Good morning, traders. Welcome to Game Edge pre-market prep. This is Michael coming to you from Game Edge on Tuesday, November 11th. Happy Veterans Day to all the veterans joining us. We appreciate everybody joining us this morning. We'll give everybody just a minute to file in, and then we'll go ahead and get started. If you're joining us on X and YouTube, you can like and subscribe. You'll be notified when we go live with content. As well as our midday review when our team has time, and well as our post-market recap. And you can review all of our pre-market prep videos from the past few weeks on YouTube or X. And then our intraday commentary is mostly posted on X, reviewing our tools throughout the day and how we're navigating the SPX option structure. So we'll give everybody another minute. If you want to review any individual equities at the end of the presentation, go ahead and throw those in the voice chat, or if you have any questions as we're going along, be happy to answer those live as they come up and as we're covering our content and tools. Anyway, welcome everybody in this morning, and we'll get going in just a minute. This is the tick US, Tom, not the tick RC. Good morning, everybody. Good morning. Welcome, welcome. Tick RC is actually over the ribbon. So. Yeah, so there's, I see StreamYard has put two streams out. One is full screen and one is small screen. I'm not sure why that did that this morning, so I will check into that. Hey, Nick, how are you, man? Good to see you. Welcome. So if you're seeing this on a small screen, you might want to go back into YouTube. I guess there's two streams going this morning. I have no idea why, or go to X and check that out. So it seems like StreamYard must have updated and changed some of the settings, so I'll have to review that. So, all right, let's go ahead and get started, everybody. As always, we'll start with our market trend model. We do our three pillars here at Game Edge: sentiment, structure, and trend. We're currently looking at our market trend model. This is the tick US. This is all exchanges, so this is a little bit more sensitive than our tick RC, which is what we base the our mechanical portfolios on, which we'll go over next. Key takeaway here is new highs versus new lows breadth indicator. We had new highs barely outpacing new lows yesterday. The filtered cumulative tick indicator, this is larger block orders, buying versus selling via institutions, plus 1,000, minus 1,000. Good. I'm glad you can see full screen. Good. So this is obviously above zero and moving to the upside. So institutions were buying versus selling yesterday. And again, if I didn't say this, this is based on the tick index. So that's just buying versus selling in the overall market. Our bolded white line, that's our intraday instantaneous cumulative tick. And then our shorter term, what we call railroad tracks or moving averages. Those are our 1 to 3 day indications for positioning in the overall market. And then our colored ribbon is our longer look back period. So what we want to see is the bolded white CT start emerging above the colored ribbon, as well as the railroad tracks to the upside, indicating that market participants are buying more than selling. And then crossing above the colored ribbon would indicate a longer term uptrend may be starting. So we move on to the tick RC. Now this is what we base our mechanical portfolios on. So obviously this looks significantly different. This is kind of our quality tick where we strip out some of the exchanges. This is our pay for play. So obviously larger institutions or larger market participants, exchanges also. So this, again, is a little bit more quality filtered. And we like to see this moving linear to the upside, which we saw yesterday. That's key, indicating more market participants who are buying versus selling. So now our mechanical portfolios, our P-trans to PX, as well as our wheel strategy are turned on. So we will be entering positions. Key takeaway is this is our first trigger day of our mechanical portfolios turning back on since we crossed below the ribbon. So we are still prone to failure. This could easily roll right back over depending on what market participants are positioning for. And if that's the case, then we'll exit those positions the next day, and then we'll wait for the trigger to turn back on. We want to see the red. I could expand this a little bit, but we want to see the red line start crossing back above the cyan, and then start stacking these moving averages in the proper order to the upside, and then expansion to the upside. If you look back at any of our historical cross back up over the colored ribbon from our videos, you'll see this start to expand to the upside, and then we start a longer term uptrend as we continue to the upside. So we'll watch this, see if this fails quickly, or if we continue and have a sustained move to the upside via our market trend model. All right, moving on, the SPX options complex. It's the largest, most notional value, so that's why we look at it. Largest, most liquid. We separate the SPXA and the SPXP. These are obviously AM expiries. This is institutional positioning or larger market participants. You'll notice these are monthly expiries, so these contracts don't turn over as rapidly, so positioning is not changing. We are call dominated, as we have been in the SPXA on all the pullback. During the market pullback, you'll notice yesterday we actually had some red net delta, and now we're almost removing all of that red net delta, which would be the in the money puts overhead, as well as out of the money put speculation. A couple spatterings left, but as spot price continue to appreciate, we do see out of the money speculation coming in full force for the November expiry, all the way up towards 6,900. That'll be that key round level where we failed previously, and then started dropping back down. As long as we stay above the transitions, we'll be in a more positive, favorable environment for price appreciation. We noted by the green arrow here, as well as our transitions areas below us. So call dominated is the takeaway from institutions. Really no change in position. They're speculating to the upside and entrenched fairly well to the downside. All right, let's move on to the SPXP. All expiries turned on, call dominated, so should be supportive on any pullback. You'll notice GEX and DEX transition confluence. We really like to see that. That gives us a little bit more confidence on pullbacks or if-then statements for trading. Again, 6,800 staying above that, we should be supportive and moving to the upside on any pullbacks as we see in the money calls below us. This structure has significantly repaired itself also. If you look back our previous videos over the past week, this net delta above and below spot price was pretty red, and noting in the money puts above as well as out of the money puts below, and it's repaired itself pretty significantly. You'll notice this morning or yesterday, obviously, where we parked, this was sandwiched between two opposing sides. And this is a lower exposure neutral position for dealers and market makers. And that's usually how we get the pinning type action, which we talked about yesterday, also intraday. So again, we'll see where we are moving pre-market. And as long as we're staying above transitions, that should be bullish. All right, moving on, the SPXP GEX ratio or gamma edge ratio. We spoke about this yesterday, that if we did see spot price appreciation, we wanted to see a positive slope and moving above 1. So this ratio is short dated call gamma versus short dated put gamma. So it's kind of like a put call ratio, but we add a gamma component. Yeah, ACX, there's two streams this morning. One is vertical and one is horizontal. StreamYard for some reason put out two streams. So if you go to the other YouTube stream, it should be horizontal. So again, we wanted to see this moving to the upside, indicating short dated call gamma going into the overall complex, overriding the short dated put gamma. So being supportive of a move up as well as out of the money speculation. So we'll continue to watch this. We're back above 1, which we give that to the bulls. And then we want to see this continue to move to the upside as the speculation continues to ramp up with the SPX spot price. All right, moving on to Delta Balance history for today, SPXP. Again, this has repaired itself pretty significantly. I did force spot price at the open to 68.14, and this was dropping a little bit more than what we're seeing here. Yeah, it just allows for people to view on phones also, mobile if they want. Delta Balance on out in time, pegged at 1. We see it's now moved up towards the +1 in the Delta Balance here. So this is the aggregate of the right-hand plane and the left-hand plane. The right-hand plane is above spot price. That's how market participants are positioning. Right-hand plane would include out-of-the-money call speculation as well as in-the-money puts. And the left-hand plane is your in-the-money calls below spot price as well as your out-of-the-money put speculation. So obviously you want to see the right-hand plane continue to move to the upside. That's the out-of-the-money call speculation. We know that the options or the spot price does not go where options are not. So we want to see those calls coming into the overall complex above us, out-of-the-money calls. We want to see the left-hand plane continue to repair. Those are in the money calls below us. Those will continue to be supportive. on any pullback down towards those 6,800 or transition levels. So again, we see the delta balance pegged at 1. We see the right-hand plane increasing. We see the left-hand plane dropping a little bit. We want to see both of these stay above 0. And then for the further expiries, sorry about that, excuse me. Further expiries on out in time would indicate that bulls are in charge, and then call speculators are maintaining the overall complex. So we'll continue to watch that. All right, moving on to the net stack command. These are high sensitivity levels for today. You'll notice that heading into today, we actually have in the money puts overhead and then in the money calls below us. So this is what we call a locked horns position as we're at this spot price here. Now, the right-hand plane, though, is significantly less than the left-hand plane. And it would not take a large amount of out of the money speculation to drive above the 6830, but you'll notice a confluence on the SPX 0DT levels when we talk about those here in a few minutes. So this will be important, 6830. From the charm standpoint, 6850 overhead. We talked about that headwind yesterday. If we could overcome that headwind, again, out of the money calls here, out of the money puts below us, those will continue to be supportive, as I spoke about at 6,800. And then gamma, the sensitivity levels, if we're adding net delta or removing net deltas, if we're above or below these levels. And then Vanna, if we see a volatility drop. We spoke about the possibility for a Vanna rally yesterday to our members, and we posted some info about that yesterday. So make sure you check that out. It played out extremely well for our members, and we were able to capitalize on that move to the upside as we started crossing key levels, and then we're adding fuel to the fire via Vanna, noting what specifics we needed for the Vanna rally to happen. All right, let's move on. The SPXP 0DT call dominated for today, so should be supportive on any pullback. Obviously, 0DT turned on via our web app. You'll notice the drunken sailor range. I spoke about this morning in our X post, that this is very low exposure area today, as you see by the low net OI, actually -12, 31, 89. So we're below even 100. So a significant lower exposure area. So we'll be driven by the intraday call versus put speculation by market participants. And then the overlap of the GEX and DEX transition. So within these zones, these congestion zones can be very choppy price action. If we get below 6805 down towards the drunken sailor range, we'd anticipate this to be supportive as we have in the money calls below us, but we could see some more weakness, short-term weakness down towards 6770. If we're above the transition area, as well as the drunken sailor range at 6835, 6840, we'd anticipate price appreciation to the upside, again, depending on what our intraday call versus put speculation, that would be our vol M command, is showing, those called versus put centroids that we've been posting extensively. And then above 6850, we'd look for price appreciation up towards the COTMC level, which would be 6875 to 6880. Again, PGEX up there at 6850, transition 6835, 6840. We'd be long for a move up towards those levels. So we'll watch the intraday price action, as well as within the overall transition zones. Again, we could just be stuck, as you'll notice by the net stack command. We have 6830 in the money puts overhead. Those will be a headwind. 6850 out of the money calls on the charm level. Those will be a headwind, and then supportive down below. So if you match those with here, again, we'll have to see a large amount of OTM call speculation to drive through those levels overhead. All right, let's move on here. GameEdge.us bringing you today. So make sure you go to the newsletter section, punch in your email. You'll be delivered Beyond the Bell newsletter over the weekend. This is all free again, and it goes over our strategies and our thesis and our tools. And then go to the free courses, GameEdge Fast Pass, this flagship options course that we have put extensive time into for education for our members, as well as people out on the web that follow us. Again, sign up now, put in your email, and you'll be delivered that for today. All right, we'll move on to the Trading View chart. I've overlaid our Trading View scripts. These are available for Thinkorswim or Trading View. Easy copy and paste, and you can have our key gamma delta levels for the day, either the 0DT or full expiry, depending on what type of trader you are. This is the full expiry. I've overlaid our 0DT transition levels just so you have an idea, and you can see that we're just chopping around the GEX and DEX transition this morning, as well as in the drunken sailor range. So thesis would be pullback towards 6,800 would be supportive. We need to get out of this overall low exposure congestion area of transition to have a significant move up. You'll notice pre-market, we've tested the prior day high there. This is obviously on the spread X, so around the 6850 level would be key to get above. for price appreciation, or we could just be trapped today between 6,800 and 6,850. So we'll continue to watch that as we move into the open, as well as our intraday vol M command, letting us know where market participants are transacting overall price. So with that, everybody, if you want to discuss individual equities, I'd be happy to discuss those. And if you go over any of the tools, be happy to discuss that. I see somebody's asking for RGTI, so we'll go ahead and take a look at that one. RGTI, we are put dominated from all expiry standpoint. So we're below transition. So very weak action there. You'll notice the red net delta. So again, significant put positioning above spot price and below spot price. PGX there at 30. So really nothing to write home about on RGTI from a bullish standpoint. It looks pretty significantly bearish there, below transition, put dominated for Friday's expiry. So, all right, let's take a look at Meta. All right, Meta, call dominated above and below spot price, spot within the overall transition areas. Fairly red, put positioning right around spot price though. So price appreciation may be difficult. Let's look at this expiry here. So we're within the overall transition. So again, choppiness action. We have in the money puts just overhead. So price appreciation will be difficult, even though we're call dominated. And then you see PGEX COI up there at 650. And then INGEX down here at 6,800. So I'd anticipate some choppy price action within the overall transition. Supportive because we're call dominated, but price appreciation to the upside may be difficult until we remove those puts overhead. Then after this expiry, we actually changed to put dominated, so that's significantly weak. Transition expands, so that is bearish and weak after this expiry towards the monthly expiry. BE, let's look at BE. Absolutely awkward. Let me know if you need anything else. Call dominated on BE. We're below transition though, so a little bit weaker. Supportive type action with the overall structure there. This Friday expiry call dominated. We're below transition though, and you see INGEX above spot price as well as PGEX and COI not significantly higher. So supportive on a pullback, but price appreciation is probably going to be difficult. You see that double strike there overhead. That would probably be difficult to move through. From a short-term expiry standpoint. After this expiry, it does change to call dominated. So you see PGEX COI up there at 140. So that'd probably be a cap on price that I would look for to the upside. Hopefully that helps, Perry. ASTS. Call dominated, below transition though. So weak standpoint there. Puts around spot price. Significant right below transition there. Kind of spattered. PGEX COI 75. Let's see what this expiry is. So this expiry is put dominated, so fairly weak, below transition, below INGEX. So it's a weak state for ASTS. If you're looking for upside, that would not be the stock that I'd be looking for at the moment. MU, call dominated, above transition. So this looks significantly better than the other stocks that we've just went over. So if you're looking for, even though we're at PGEX and COI, so structure not conducive of upside, 257.50 PGEX, so that would be upside I'd be looking for into Friday. COI is at 250, so market participants are not really speculating much higher than that. After this expiry, PGEX still 250, COI 220, so you're really kind of at the upper bounds of MU unless the structure continues to advance significantly at the moment. COTMC is 260. So that would be the highest sensitivity area that I would look for. AMD, call dominated within transition, so that will be choppy. This Friday's expiry, you're within transition. Narrow transition though, PGEX COI up at 260. So call dominated, so upside speculation towards 260 could be possible, but you need to get above transition first. So 245 would be that key level. After this expiry, transition expands a little. We see some put positioning coming in, even though we're still call dominated. PGEX COI still at 260. So that would be, I'm going to say upside is going to be difficult on AMD unless you see significant change in the structure after this Friday. So okay. And I think that's what you're seeing with the overall market too. I mean, we look at these Mag 7 stocks. Many of them are call dominated, but the upside speculation is still just not ramping up significantly. You still have puts around spot price. So opportunistic pullback traders are just, positioning around spot price. So you is call dominated. You're above transition. PGEX at 45. Let's see what this expiry looks like. Above transition, PGEX 45. So upside target would be 45 on you. If the market cooperates and if this whole sector is moving in the same direction, as we said, 75% of the market or 75% of stocks follow the overall market. So this one is positioned for upside. But again, you need the market and the sector to help you out also. As always, Jordan, appreciate it. No problem. App, call dominated. Within transition on the full expiry, let's look at the individual expiry. So you're within transition. PGEX is up at 700, but this is very low OI. So again, not under. It does hit our filter of the 1,000 OI for metric control, but total OI is 47,000. So again, not under significant dealer metric control. So it may be hard to position for this. But call dominated. So top of transition 660. If you get through 660, next area is 670. And then after this expiry, the structure does improve. You see a lot of those puts being removed. And then 680 to the upside would be that target. So, all right. Sound good? All right. All right, thanks everybody for joining us. Seems that selling calls before monthly options expiry would be the theme for the week. Depends on what individual equity you're looking at, but that could be an option. Yeah, but yeah, it just depends on what individual equity you're looking at also. So the market, we've had a significant move to the upside in the market. We're still not seeing a ton of out of the money speculation, as I just went over via our tools. Delta balance here. Delta balance does go to 1 via SPX, but if you force spot price, it actually drops a little bit. So it improves a little bit on into further expiries, but we want to see this really start to ramp up, as well as the GEX ratio ramp up also. So, yeah. All right, looks like we're just chopping around the transition areas this morning, so we'll continue to watch that. That would be most likely thesis is just within the overall transition areas, 68.50 cap on the upside there on the speculation with price, unless we see a large move via market participants. So, all right, thanks everybody for joining us. Like and subscribe, X and YouTube, notify when we go live, and as always, manage risk and have a great day.